Hello and welcome to the weekly wrap. So one of the main events this week has very much been that of the ECB rate decision and press conference. So the interest rate decision was very much a non-event as expected, considering that we are now actually at the lower bound when it does come to interest rates. So in terms of the press conference, heading into the conference, participants were looking for some more dovish rhetoric from Draghi and indications about a potential QE programme. However, they were left very much disappointed, as Draghi instead appeared to somewhat kick the can down the road, and instead said the ECB they'll sit on their existing measures, which was as expected following the ECB source comments last week, with the ECB instead to assess stimulus next quarter. And he did also then say that this might not even refer to the next January meeting, it could actually be thereafter. So in immediate reaction to this, we did see somewhat of a sell-off in equities and fixed income products, with the euro granted some reprieve against the US dollar. However, later on in the press conference, some of these gains and losses were trimmed, following an interesting comment from Draghi, but did actually say that the ECB would not necessarily need unanimity should they carry out such a QE programme. So therefore, this could be a disappointment for some of the hawks sitting on the governing council. And a couple of hours after the press conference and after the European close, you saw some particularly interesting ECB source comments, which said that the ECB were underway designing a QE package. So they did also go on to say that there's no specific designs for the programme and no decision had been made yet on implementation. However, these source comments were very much a contradiction to what we had seen in that press conference. So now, searching on the European Open on Friday, we did see some immediate upside for European equities and fixed income products. So this could be very much a theme to look out for in the coming weeks, although the next ECB meeting itself is actually until January the 22nd now. And today the main event was of course that US monthly jobs report. So that headline figure, that came in at 321, well above the expected 230, and all in all was a particularly strong report. So we did see an immediate fast money sell-off in fixed income products and equities, as this does further expectations for the Fed to bring forward their rate lift-off programme. However, the downside for equities was relatively short-lived, as all in all this does actually indicate that the fundamentals of the US economy are relatively strong, so equity markets taking this as more of a positive rather than looking at the rate implications for the Fed. Other than that, these have been the main two events this week, so that's all from me, and I hope everyone has a fantastic weekend.